Today is Tuesday, January 10th, 2023, back for another review. And we are starting off on the NASDAQ 5-minute chart. And yet again, for the second consecutive day, we can see that we have a DR range that did not hold true. Here we broke the DR low, closed below it, and then rallied to make a new high, which is not supposed to happen. And then just like yesterday, price broke above the DR high and then dropped off to make a new low. Now, yesterday we talked about how this was a scenario 4. Scenario 4 is where we have a break and then a reclaim of the DR range after price hits a higher time frame point of interest, which we talked about how this hit a daily level and a weekly level before reclaiming the range back and then heading back down. So the first question I would pose is, did we have a scenario 4 today? I would argue that the answer was very clearly yes. Now, that doesn't mean you have to trade in the direction of the scenario 4. It doesn't mean you have to counter the DR if you really are one that can't get over getting past those statistics. But for me, I do take trades against the DR if I see something like this. I did not get an entry today because it did not hit the level I wanted it to hit at the time I wanted it to hit it. So I just stayed by watching. But what I did not do is I did not short it because I saw conflict. I saw this as a compelling scenario 4, a good reason to be a scenario 4. And so let's break it down. Why did I see it that way? And, just for starters, without putting any other markings on the chart, let's just take a look at this. We have our Asia range, price comes up, makes a new high, takes out buy-side liquidity in London, sells off during London and pre-New York, okay? Now, this could be a power of 3 classic sell day where Asia range, manipulation, Judas swing, and then downside expansion. That is a daily profile that we see a lot. However, we didn't get that. We instead had this consolidation below the Asia low, and we had Powell speaking right here at 9 a.m. And while he was speaking, we saw these impulsive moves higher. Then right at New York Open, price, after hitting this imbalance, had another move higher, comes back down, retests this consolidation, rallies again, makes a new high, reacts off of basically the midpoint yesterday in this structure here, and then had a nice reaction lower. Now, we did get a close below the DR low, but look, it was just one candle close below the low and then an immediate reclaim. So you just have to ask yourself, well, why are we doing that? Is there a compelling reason why price is doing that? Is it to just retrace and then fill an imbalance and then make a new low? Or are we hitting some higher time frame liquidity that's going to support price and carry us higher through the day, which would be basically a scenario 4. And like I said, so far, first and foremost, we don't have the classic sell day because once price kind of takes the manipulated high, if you will, the Judas swing high. So let me just draw this out again. If we were expecting this to be a classic sell day, this would be our range. This is our Judas higher, and then our expansion lower. You would expect this kind of thing to happen. I'm running out of room. You would expect this kind of thing to happen where it would just expand lower to the downside. Instead, we get this just a run below sell side liquidity and then displacement higher. Then we have to say, okay, so again, why is price reacting here? Well, we can see just on this time frame alone, on the 5-minute, we have this consolidation and then this aggressive move away. So price could be just retesting the imbalances that exist here in this consolidation, which is basically what happened. If we just work our way up, we can see on the 30-minute, we have this imbalance here after taking liquidity again. And more importantly, let's just go back out to the daily chart. It's very clear to see that we have this opening gap here on the daily chart, which is a very obvious point of interest to have. We know that when we have these gaps, we expect it to hold as support, especially when we have aggressive move away from it. Let's look at it on the 4-hour. Market gapped open on Monday, tapped into it, big rejection, comes back down. So we expect it to hold as support until it impulsively loses it. And so if it broke below it, then we would use it as a resistance area. There was an example in December where we did exactly that. So we have this point of interest here, this higher time frame point of interest below the DR low. And then we also have, if we look at it again, go back to the daily chart, we know that this candle's here from Monday is our weekly open. So we have our key level. And so what is this DR break doing? Is it a signal to go short? Or is it just testing something that was created here, some imbalance or inefficiency? We're taking out sell stops. If you look at it from the perspective of a false start, we've talked about that before, market right at the New York Stock Exchange open has this huge candle up. So anyone who got really excited seeing that huge expansion higher possibly put their stop loss below that low and then get taken out prematurely before the market goes higher. And so what we have here is a clear scenario where price breaks the DR low, hits our higher time frame areas of interest. This is our 4-hour and daily opening gap at our weekly level, where we also have imbalance on 5-minute, 15-minute, 30-minute time frame, and then price immediately reclaims the range and works its way back up. So what trades could we have taken? What was I looking to take? So this is the lunch hour. And this is why I did not trade today. So first of all, what did price do after hitting this? We see a nice push higher, hitting this bearish imbalance from this move down. Price consolidates, comes back down, fills the imbalance created on the move up, then creates this bullish order block, engulfing candle, comes up, retests it, and continues higher, creating a new imbalance right here as well between this candle's high and this candle's low. We can see how it's respecting it. Again, this was not a trade I took. So what trade was I trying to take and why didn't I get involved? So first of all, this wasn't completely clear to me on the 5-minute, number one, but people ask me all the time, why do you have all these time frames? Do you use all the time frames? How do you know which one to use? And the answer is I don't always use all these time frames, but I do periodically when I'm just sitting here watching, I just flip through and see how things look on different time frames just to see how price action is developing. And sometimes you get it cleaner on one time frame or another. And here, this is where it looked clean to me on the 6-minute. Now, is there a huge difference between a 6-minute and a 5-minute chart? Well, you'll have to decide for yourself. But for me, it's really, if I see the clean structure and the clean price action, then I'm going to favor that time frame for that day and that period of time. And here, again, if we just play it candle by candle, big candle down, consolidation, manipulation of these lows, tries to run lower, false break or whatever, rejected, big wick, impulsive engulfing candle that continues higher. So this is an order block that took liquidity and hit this imbalance to the left in their key level. So this was the area that I was interested in buying from. And you'd say, well, why didn't you buy it then? And the reason why I didn't buy it was because it was right at the lunch hour. And I don't love taking trades right at the beginning of the lunch hour. And truth be told, even though I saw this as a scenario 4, like I said, I was still kind of in conflict because I didn't love how we were reacting off of, again, like this imbalance and had this wick here coming back down on the 4-hour as well. So we're reacting off of bearish imbalance. And so like I said, I was in conflict and I didn't want to long unless I got the exact setup I was looking for. And while it hit the level I was interested in, the time wasn't right for me. So I was hoping to see us consolidate for basically the remainder of lunch and then another tap. So I did not get filled. I did not get in here. And then I just saw price move away. And I saw another possibility, like I said, to enter here. But I'm just only taking trades that I feel really, really great about. But you can see, it's just as a study, we had this 5-minute imbalance that was created. So, sorry, let me go back one more time. Even just looking at the 5-minute, let's get rid of this for a second. We have our reclaim back in the range. We create one 5-minute imbalance right here. So one impulse leg right here. Price basically just then reacts off of this bearish displacement. So we don't know, first of all, of course, we don't know, never know for sure in a situation like this if we're going to react off of here and make a lower low. I've outlined the reasons why I wasn't expecting that to happen, but it's possible. So we only have this one impulse leg up so far off of our higher time frame area of interest. So what you can do sometimes is wait for that second impulse leg, which again happens, in my opinion, right here. Why? Because this is where on this time frame, just keeping it consistent on the same time frame, this is the next bullish imbalance that gets put in, and it clears these highs, and then we can see how price respected it and made a new high. But again, to me, there's not a great trade here, just because we're, it's not the level I wanted, and like I said, I was in conflict, and sometimes it's my level or nothing. That's how I look at it. But you can see that price behaved beautifully coming into it here, taking out sell side liquidity, pushing higher, leaving this imbalance, coming in for the retest, and then making new highs on the day. That's what happened today for me on NASDAQ. I'll leave it at that so this video doesn't get too long. So that's it for tonight, and we'll be back again soon.